Yo, what's up everyone, and welcome in this new video about trading, sniper trading mentorship day 6. And today I'm gonna explain to you the third concept and confluence that you need, or not you need, you can use to trade the top tick method, which isn't really a method but a style of trading. And without wasting any more time, let's begin. So the today concept is AMD, which is accumulation, manipulation, distribution. What does it means? It means that the price, when it's categorized in 3 steps with this model. The accumulation part, where price like consolidate for a bit. The manipulation, where we sweep either the lows or the highs of the accumulation. And the distribution is when after sweeping either the high or the low, we distribute on the other side, so we reverse basically. Here I have a pretty good example of an AMD. This is, as you can see, I'm gonna do this so you can understand better. This is the accumulation part, as you can see. Why this is so gray? Okay, yeah, that's the accumulation part. I'm gonna write down. Okay, so that's the accumulation. As you can see, the price is choppy and doesn't make any good move. After this, what do we get? We get I went too far. Fuck. Okay, we get the manipulation, which is a big move either up or down. It not need to be just one candle, could be 2-3 candles. This will be an example, not of AMD but of manipulation. This could be a manipulation, but that's not an AMD. In this case, we have this one that is the manipulation, this candle here. Okay, so I'm gonna do like that because it's more cool. Manipulation. Perfect. Okay, then what do we get? We enter short here, targeting probably the lows of the AMD, but we can do, here we have some sell side liquidity, so we could do like that maybe, or like this, but usually what you want to do is like that. Okay, so let's see how, I don't remember how it went. The stop loss, as always, like 10-point stop. It's a good stop loss, but with this model that is really simple but effective, you can do like 5-point or either sometimes 2-point if you want better risk rewards. So like this, you enter and then see what we get. Exactly, we took out this AMD low, and I think we will hit a final TP, maybe. Yeah, exactly. And just with this simple model, you get away with 17.5 risk rewards, which is crazy. But even with a 10-point stop loss, that's 3.5 risk rewards, which is crazy and great good. 5 is usually the best. 7 risk rewards. And this in fact is the the distribution. Okay. That's the distribution. I can't explain it better than this. These are the notes, as you can see, the concept overview. So accumulation, price consolidating within a range, that's the range, price consolidate. The manipulation, a false breakout occurs, trapping the traders, that's the manipulation, we sweep. And the manipulation intend direction after manipulation, so we distribute the order. Of course, as any other concept, you need context. In this case, I didn't watch any other concept, but you need context. So in this case, I don't know, I don't want to switch, I don't want to make a mess, but we don't even have any fair value gap, so I don't know if this could have been actually a good AMD. Also, we were in an uptrend. No, that's a 5 minutes break of structure, change of character, so I don't know. But yeah, we swept this session highs, so it was a pretty good AMD. But now it's not important, so basically when you trade it before as any other concept, it's always the same. In any way method of trading, you need the bias of the day, so if we were bullish or bearish, you search for longs. If we were bearish, you search for short. And in this case, let's say we had a bearish bias because we had these lows right there. It was a good trade, but we also maybe needed a good fair value gap. Maybe let's say there was a fair value gap. We tapped into the 5%, the 50% mark, and rejected. That was a good trade, for example. Or maybe there was a weak CE, an engineered liquidity. Okay, so that's basically what we need to do. So the final key consideration, context and bias, as I just told you. The AMD, it's a very simple model. As you can see, it's just a 3 steps model, not difficult to identify, not difficult to understand, but it's very effective. And yeah, scaling down to lower time frames, this method is not the best with higher time frames. Perhaps the 1 and 5 minutes are the best to trade it with. And yeah, that's a model. Then that's not really a concept, that's a model. So you add this to your strategy to make it a very mechanical strategy. For example, in your strategy you already have the weak C and the key levels that I explained to you. Let's say that's just an example. You have the key levels and the weak C. You want a proper model, because a strategy it's basically a model and a mechanical things to do, a list of things you need to do. And yeah, the weak C, you got the weak C, you got the key level, you enter just like that. Maybe not the best. You add the AMD, you see AMD, perfect, A plus setup, you enter. Okay, that was basically it for the day. Not many things to say. Take your notes. These are the notes. Screenshot it if you need to. I'm gonna do like this. So you can see better. Screenshot this, and if you need any other if you have any question, just ask in the comment. I'm gonna be more than happy to help you out. And yeah, in the next video, if you need to, I'll do other example of what AMD is, but I think you understand because you already understood, because it's really simple. And I'm gonna do maybe in the next concept, which is I don't know, I need to choose. And see you tomorrow with the next video. Thanks for watching, thanks for tuning in.